NVIDIA has 3 to 5 years of AI dominance ahead.
Company has tripled in value in about a year. Is this growth sustainable as investors continue to reward the AI hype? Here with more, we've got Doug Clinton, Deepwater Asset Management managing partner here. All right, so let's start there. Is it sustainable?
I think it is sustainable. And, it always sounds smart to ask the question, when will this be over? You look at the hockey stick that you just described, Brad. It feels a little scary. It looks a little scary on the chart. But I think the reality is this: we are in inning 3 or 4 of this AI bull market. I think that we are still early, as uncomfortable as that sounds and maybe feels. But I think it's going to feel uncomfortable all the way until we get to eventually being in a true AI bubble, which we think is kind of the culmination of this bull market. And then people will stop talking about valuation altogether. So that's the odd sort of counterintuitive reality is we're worried right now that things might be over. It's probably not over. When we stop worrying, that's when you should start worrying.
And also, Doug, just taking a step back, we also have the stock split that's going to take place or be effective after the end of the trading day tomorrow. I guess when we just talk about some of that near-term excitement, that buildup that we've seen within AI, how big of a driver do you see that? It's probably just going to be a very brief blip here, or a move bump to the upside, but how big of a driver do you see that in terms of just the narrative and excitement surrounding AI?
I think the stock split for NVIDIA, as you said, Sean, I think that will just be kind of a blip here. Obviously, that gets certain people excited. Mentally, you see a lower stock price and people feel like it may be cheaper, even though it's not. I think the reality, though, with NVIDIA is they continue to show business momentum. I think that's really what is the most exciting piece of the entire story, is that despite all of us worrying that eventually this demand for chips will slow down, we haven't really seen that slowdown happen yet, and it may take longer to slow down than we think. That's kind of the new opinion that I think the street might think about.
And so
there's going to be a moment. I would say this moment's probably coming in the next, I would say, 3 quarters, if I had to guess. And it's going to be a very negative moment for NVIDIA stock. Very, very negative moment. The moment, what's going to happen, and like I said, I think this will probably happen in the next 3 quarters, and the stock's going to move down massively after this, is NVIDIA is going to report a quarter, and the beats are going to be very small, and they might not raise guidance, or if they do, it's a very small amount. And that's going to be a moment where everybody takes a step back and freaks out. Because then they're going to say, it's here. The moment we've all been dreading, it's here. NVIDIA's business is, starting to fall apart. Now, that might not be true, by the way, in terms of their business falling apart. It will just be a view of, we're starting to reach a top in this big AI chip boom. And once again, that might not be true, but people are going to freak out about it. Because everybody's gotten so used to NVIDIA destroying their past quarter numbers, upping guidance in a $1 billion plus way, that whenever that doesn't happen, and like I said, it'll probably happen the next 3 quarters, in one of those 3 quarters, right? Everybody's going to flip their flapjacks and freak out. And so that's going to be a moment, and where it's going to happen, and it's no guarantee, but I think there's a pretty high probability it's going to happen, and that's going to be a big downward move for NVIDIA stock at that moment. So that's going to be interesting, right? And then the other big moment down for the stock, if you're ever thinking about when does the stock move down, right? Because really, NVIDIA just has nothing but upward momentum until that happens, or the other scenario, and this you might have to wait till late in 2025 or maybe even 2026, when they have a quarter when on a sequential basis their revenue actually goes down. That will be a very negative moment. Or they're projecting on a sequential basis revenue to go down. That'll be an extremely negative moment for the stock. But that might not be till late 2025. That might not even be till 2026 in regards to that. So I wouldn't worry about that as much. But those are really the only 2 major negative things for NVIDIA stock. Everything else is kind of green shoots, positivity, kind of upward momentum there. But those 2 things are the scary ones. And the first one, that'll probably come, I would say, in the next 3 quarters. The other one, probably in the next, I would say, 7 or 8 quarters. That one might push out further.
We're thinking about what the street is going to continue to rally on the back of here. I mean, we just laid out the entirety of the companies that are really within this $3 trillion conversation. And for NVIDIA, it's really been the artificial intelligence demand that they continue to cite, and how people are essentially looking at them as this de facto AI play. What about the market share that they need to retain in order to continue to maintain this type of sentiment in the street?
I think that's the right question going forward. I mean, right now, from a market share perspective, they likely have 80 to 90% of accelerated compute market share for chips that do power this AI revolution. And I think going forward, they probably need to maintain share in that realm. So the question really is, number one, can AI companies that are building these models like Google, like OpenAI with their partnership with Microsoft, can they eventually generate revenue that makes this investment justified? That's an outstanding question. I think they will. It may take longer than investors hope, but I think they will. The second question, to your point, is can NVIDIA maintain its dominant position providing the brains to these artificial intelligence models? And I think they can for the next 3 to 5 years. I do think that we should pay attention to all of the hyperscalers building their own silicon. There is going to be competition out there, but I still think at least for the next 3 years, NVIDIA is going to be the go-to company.
Doug, I was just out at Bank of America's Global Tech Conference earlier this week in San Francisco, and I was talking to some executives. The Nutanix CEO, Rajiv Ramaswamy, was one of them. I was also speaking with the founder of Pure Storage, and they've raised that issue that you were just bringing up, right? Just in terms of how realistic maybe these timelines are until we see some real return when it comes to some of those secondary players. I'm curious if you think that the market almost needs a reality check at this point, and maybe the excitement in some of these plays, maybe not NVIDIA, and certainly doesn't seem like NVIDIA, but when we talk about some of those secondary plays, has it gotten a little ahead of itself at this point?
I think it depends on your timeline. And when you look at sort of these technologically driven booms, they're never purely up and to the right. When you zoom out, they always look like they are. But when you live through it day to day and week to week, there are pullbacks. I mean, even NVIDIA had a 20% pullback earlier this year. That's painful if you bought the stock at the top. And so I wouldn't be surprised if we do see some of those right sizings, temporary right sizings, in the next 3-6 months, as investors do think about how do revenues ultimately translate. And I think the story with emerging technology is often the same, which is it usually does take a little bit longer than everybody hopes to generate meaningful revenue. But once that revenue comes, it's often bigger than people even imagine. I think that's probably going to be the case for AI too.
Just while we have you here, NVIDIA CEO Jensen Huang talked about demand for the company's chips in an exclusive interview with Yahoo Finance. This came after the company's first quarter results last month. I want to play for you a clip of what he had to say.
Hopper demand grew throughout this quarter after we announced Blackwell. And so that kind of tells you how much demand there is out there. People want to deploy these data centers right now. They want to put our GPUs to work right now and start making money and start saving money. And so that demand is just so strong.
Do you have an assessment of, within these data centers, the makeup or the total number of chips that we could even potentially see some of these data centers grow out to, as we're looking for even more demand that is going to be needed? Well, not needed, but even more that is going to be asked of the chips within the data centers because of generative AI.
It's a big number, and the reality is you can look at several data points. I mean, XAI, for example, a company that Deepwater actually just invested in recently, Elon Musk has talked about needing 100,000 of NVIDIA's top-end AI accelerator chips to build the supercomputer that they want to build. That's $3 to $4 billion of CapEx there from a single customer. And obviously, that's just one data center. That's one supercomputer. They will continue to build more infrastructure over time. And I think you can look at the same thing for many of the other hyperscalers. We're talking about hundreds of thousands of chips that are needed there. And maybe even if you expand out, you look at sovereign nations that are looking at AI, you look at industry that are thinking about how to apply AI, the demand for the chips could scale into the millions.
Yeah, so right now, all these big tech companies, all these tech companies in general, it's very important everybody understands this. Right now, they're only looking at the positives. They're only thinking about how much they can grow their business and do this and do that, right? And so they're willing to spend pretty much, almost unlimited amount of money on these chips with NVIDIA right now, right? And so that's great for NVIDIA for this year and for next year. But the problem is, a lot of these companies need to really start to see good inflections in regards to their business models when it comes to actually making money this year and into 2025 if they're going to keep spending as aggressively as they have in 2026 and 2027. So it's just important everybody understands it, because let's say let's say end use cases are not really all that exciting for AI over the, for the remainder of this year and into 2025, then essentially a lot of these big techs will start cutting back significantly on how many chips they're ordering, right? Which would obviously very negatively affect NVIDIA starting in 2026 and into 2027, right? So just a little food for thought in regards to that. Now, if the end user, let's call it, rapidly uses these AI products over this next year or two, then NVIDIA can keep pumping out these orders and keep, these big techs will keep spending because they're going to get the return on investment there. But, if they're not really seeing a very good ROI or much of an ROI or interest next year or the year after, then at that point in time, especially if they had any sort of real weakness on their stock price. So just a little food for thought in regards to that, but it can work either way. Hey, I want to thank you for watching this video here today on the Clips channel. I want to introduce you to 1000xstocks.com. This is the most valuable service you're going to find out there. If you're an investor in the market, this is a tool that's going to help you immensely get to the next level in the market. So when you're looking at 1000xstocks.com, you're able to understand all the different metrics laid out exactly how you need them as a long-term investor in the market. So let's say I wanted to look at a stock like Palantir. I can go ahead and type in Palantir right here, and it's going to say all Palantir's different metrics right here. Let's say I want to go ahead and look at a stock like Tesla. I can go ahead and type in Tesla right here, search, it's going to give me all Tesla's metrics right there. Let's say I want to look at a stock like PayPal. Go ahead, search it up, and then it's going to give me all PayPal's numbers laid out right there. Compare feature is one of the most valuable features of any service literally in the world. And the reason being is you're able to compare 3 different stocks all next to each other in a matter of seconds. It's absolutely, there's no service you're going to be able to find something like this. So let's say I wanted to find out, what do I think is a better buy? Do I think it's Meta? Do I think it's Google? Or do I think it's, let's say, a stock like Microsoft, for instance, right? So I can go ahead, type all those in there, and then hit compare, and boom, in a matter of, what was that, a second or two, it gave me all the metrics out. So now I can say, okay, Meta's forward P is trading at this, Google's forward P is trading at this, Microsoft's trading at this, and I can go ahead and understand this on a very high level. Additionally, we have earnings calls on here as well. So if I need to listen to any companies I own or am researching their conference calls, I can do it right here through the service. So let's say Tesla, if I want to pull up Tesla's latest conference call, boom, I can play it. I can adjust the speed as well. So if I want to listen to it at 2x speed, I can listen to it at 2x speed, 1.5x. I also have the transcripts of the conference calls as well right here. We're also working on a lot of different new features behind the scenes. So if you would like to apply for access of 1000xstocks.com, go to 1000xstocks.com and you'll be able to fill out an application and go from there. NVIDIA stock is absolutely parabolic. They're inches away from taking over Microsoft as becoming the biggest company in the world. I want to hear this analyst explain why he believes NVIDIA is going to $1,500. Now, NVIDIA is about to do a stock split. So basically, this is a call on NVIDIA after the stock split going to $150 a share, which is a considerable upside from where the stock is right now. Alrighty, guys, let's get into NVIDIA.
On NVIDIA, it's already been a huge year for the stock, obviously. Shares, though, up over 130% so far just in 2024, surpassing that $1,000 milestone for the first time a few weeks ago, and just this morning hitting another record high. But it hasn't just been this year, right? NVIDIA's dominance sending shares skyrocketing over 500% in the last 2 years. Take a look at that extreme climb there, and that coming as investors double down on AI hype. All of NVIDIA's momentum leading to a lot of bullishness across Wall Street. Bank of America becoming the latest, hiking their price target on NVIDIA this week from $1,320 to $1,500. This is now the highest call on Wall Street for the chip giant. The analyst behind the call, Vivek Arya, is Bank of America's senior semiconductor analyst, and he joins us now. Vivek, thank you so much for being here with us to talk about your bullish call on NVIDIA. I'm curious, why 1,500? Why not doubling your price target on this name, considering the amount of bullishness and the fundamentals that back it up?
Sure. Good morning. Thank you for having me. So I think there are 2 aspects to it. The first is where we are in the cycle of converting data centers to accelerated computing, right? The concept of the data center is not new. It's been around since the 1940s. But then we have these multi-decade infrastructure upgrade cycles from the mainframe to the microcomputer, to cloud computing. And now we are at the start of what I think would be a decade-long conversion over to accelerated computing. What is accelerated computing? It's a way of taking a lot of very intensive data processing tasks that have to do with images, with voice, with video, with the processing of these large language models, and converting the data center with new kinds of semiconductors to make sure that processing can be done very efficiently. We are just at the start of this cycle. We think that the spending could be anywhere between $250 to $500 billion a year, and NVIDIA is leading the charge. And I know there is often this comparison to let's compare it to Intel of the past, or let's compare it to Cisco of the past, or other parts of the technology upgrade cycles. But what is different is that NVIDIA is bringing a combination of silicon, of systems, of networking, of software, of developers, and that is unprecedented. So to come to your question, technology stocks, the price targets really move because of the size of the market, because of their execution. And even at this $1,500, the stock would essentially be trading at 1 times their earnings growth rate. If you look at the S&P 500, it's trading at 2 times their earnings growth rate. So I would claim that even at this kind of price level, it's actually trading below where the broader market is in terms of the price to earnings to growth ratio.
High target on the street for you, Vivek, for NVIDIA. What is the significance that you see in deals like the one that...
Let me say this, okay? I'm shocked. I'm absolutely shocked that that's the highest price target on the street. Somebody needs to have a $2,000 price target on this, right? I was calling this out 6+ months ago, talking about NVIDIA in this cycle, before it's all said and done, is going to go to $1,500 to $2,000, right? And which once the split happens, that'll be $150 to $200, right? And then I think it will likely peak. There'll likely be, you'll see a major slowing in the business. There'll be, customers won't order as much. Then AMD will actually start seeming like more of an actual competitive threat by that point in time, which they really haven't up until this point in time, right? And then you'll get more of these big techs to create some of their own custom chips. And then you'll see kind of like demand weaken overall. And then long-term demand's going to be there for NVIDIA, right? Long-term, the business is going to be there, but these businesses go through cycles. They go through very hot, like 3 to 5 year chip cycles, right? We're in year 2 of that chip cycle. So likely next year will be another great year for NVIDIA in regards to this chip cycle. And then maybe 2026 or 2027, they start to see a pretty nice slowdown. Now the stock will have topped way before that, though. That's an important thing to understand. The stock price will top probably minimum 6 months, if not 9 to 12 months before the business actually tops. So it's important to understand kind of, these stocks price things in the future that's going to happen, right? So, but yeah, shocked. I mean, crazy that no one has a $2,000 price target on this stock. It just seems like it should peak.
That is being reported this morning. XAI potentially going to be taking the chips that Tesla was supposed to be getting from NVIDIA here.
Yeah, I think there is a race going on between technology companies of various types. We have seen that across the cloud players, who have raised their capital spending forecast to over 40 to 45% growth. Last year, we were thinking that growth would be 20%. It's already 40 to 45%. There is a race between these different technology companies to be the first to support the next large language model, to make sure that they are the destination of choice for a lot of startups who are trying to really kickstart their own generative AI applications. And then this market is broadening from these cloud service provider to a lot of enterprise verticals. And in this most recent quarter, NVIDIA did call out that automotive and automotive customers, which I assume includes Tesla, are part of that really large vertical. So we see this spreading from cloud customers towards automotive, towards healthcare. A lot of drug discovery is being done with this infrastructure. Financial services are benefiting from it. And then the last but not least part that we will start to see more is the rise of this infrastructure among sovereign, right? So we have seen India, Europe, Japan, every country and region, the Middle East, they are trying to make sure that they are able to use their culture, their language, to really go and train these large language models. And we think we are just at the start of and that could be a really large infrastructure upgrade cycle as well.
Vivek, you mentioned customers, and it makes me think about Intel's latest chip announcement, and the executives really speaking about this idea that their chips are not necessarily for the hyperscalers, they're for more of the enterprise customers. They're going to be a little bit more affordable. To what extent do you see that as a winning strategy for Intel moving forward, particularly given the amount of headwinds facing that stock over the course of the past year here?
Sure, absolutely. I think we have to give Intel the credit that they have very strong enterprise incumbency. They are the brand name, one of the most trusted names in enterprise infrastructure. But broadly speaking, Intel is facing this challenge where they have been behind in AI. They have the incumbency, but they don't quite have the deployed base, the range of software developers. So, for example, NVIDIA has 5 million developers on their CUDA platform. So a lot of the enterprises, as they start to look towards their AI infrastructure, the first name they turn to is NVIDIA, for the reason that there's a lot of developers who are already familiar with NVIDIA's infrastructure. And number two, as these enterprises start to scale out, they look towards cloud instances. And that too is where they find a lot of NVIDIA-based instances. So broadly speaking, if I look at the overall AI chip market today, we think it's about $100 billion or so this year. NVIDIA is about 80% of that. Custom chips from Broadcom, Marvell, and others are another 10 or 15%. And then you have this long tail, which has AMD, which has Intel, which has a number of startups. And even as I look forward over the next 3 to 5 years, as this market doubles or triples from here, we think that ratio will stay relatively in that range, that NVIDIA will continue to have 80%. We think custom chips will have another 10 or 15%, and then you will continue to have this long tail of companies that have a presence. They benefit from the rising tide in this market, but they're never quite able to achieve the escape velocity that the leader in the market has. And by the way, that is not too uncommon. If you look at other parts of technology, search, social, e-commerce, operating systems, you see the leader that has the early start, that has the scale, the incumbency, the relationship with developers, claiming 80+% of the market. And we see exactly the same thing in the AI chip market as well.
Yeah, trying to expect Intel to be any sort of major competitive threat here, or thinking like that's the play, like Intel's really underperformed, NVIDIA's done great, so I could get outperformance, I can get some alpha in playing Intel instead of playing NVIDIA. It's the same thought process as thinking like Jack in the Box is going to outperform McDonald's moving forward, or it's the same thought process of thinking like, oh gosh, I don't know, back in 2012, that BlackBerry was going to outperform Apple because Apple got to the smartphone first, but BlackBerry will play catch up, and look how that worked out, right? Like it's just ridiculous. It's just ridiculous. Like Intel's been a serial disappointing company over and over again, and NVIDIA's been continually an outperforming company. And so if you want to play anything in the space, you got to play the big dog. You got to play the winner chicken dinner, and that is NVIDIA, right?
So what would change that?
It's either you got to play that or you got to play nothing in regards to the chip space.
Dynamic moving forward, Vivek, and I would love to get your answer on that in the context of some of the cloud providers that are trying to compete with NVIDIA. I was just in Amazon's chips lab, AWS's chips lab last week, taking a look at some chips that they have coming out here, and I'm curious what you think would make some of the cloud players like an Amazon a formidable opponent to NVIDIA.
No, absolutely. I think we have to look at the cloud service providers as in some way competing with NVIDIA, but even more so being very strong customers for the company. Developing chips and developing cloud infrastructure are two different skill sets, right? So if I'm developing a custom chip in a cloud, only that cloud can use it. It's not going to scale, any chip that Amazon develops. It's not going to be used by Google. It's not going to be used by Microsoft. It's not going to be used by Oracle or Meta. So in some ways, it is serving a very specific need that, Amazon might have. Similarly, the chips that Google develops, the TPUs, they serve very specific needs.
Very good.
What NVIDIA has developed is a so-called, merchant, reconfigurable, programmable infrastructure that can be deployed across a very wide range of workloads, both for when these cloud companies are handling internal workloads, such as search, such as e-commerce, such as YouTube or, TikTok, like video recommender engines, or when it is serving a lot of enterprise customers through their public cloud. Which is why I mentioned that if you, take a step back and look at the broader accelerated computing market, I do think that 10 to 15% will be these custom chips, but they will have several different custom chips, across each of these specific cloud infrastructure. But because they don't quite have a way to go from one cloud to another cloud, their range of workloads, their applicability, their scale tends to be limited to just that cloud infrastructure.
Yeah, a lot of people are very confused in regards to this. They hear about Amazon's developing chips and Meta's developing chips and Google's developing chips, right? And they get very confused and they think basically, they think these companies are going to create their own chips that basically they're not going to have a need for NVIDIA chips anymore moving forward. And that's just not reality, right? If that was the case, it would already have happened by now, right? Now, what this could do is hurt NVIDIA's growth rates longer term if these companies come out with their own chipsets and these particular chips help with their custom clouds, so maybe they don't have to order as many NVIDIA chips in the future, right? So that's something that's a little longer term of a fear. When I say longer term, I'm really talking about 2026, 2027, 2028, those sorts of years in the future, and maybe they aren't as reliant on NVIDIA at that particular time, right? I'm sure they're still going to be ordering and still going to be doing a lot of business with NVIDIA, but they're just not as reliant. Now, that's an interesting time period on where maybe you potentially see some sequential quarter over quarter actually declines in revenue. By that time, NVIDIA stock will have already started a major downtrend, right? Which is why there's a decent probability that NVIDIA's stock price could top. I would say, if I had to put odds on it, I would say probability is NVIDIA, if we're thinking about a 5-year top in the stock price, probably happens this year or maybe next year. And then you'll probably go through kind of a slow trickle downward cycle for NVIDIA for a few years, right? And then you'll start the next upward cycle, but then it takes a while to get back to where it previously was, right? And so, then NVIDIA could actually potentially become a dead money stock for potentially several years. And it happens. I mean, the next stock we're about to get into, Tesla. Tesla's been dead money for years, right?